Hey everyone, welcome back to Corporate Decoder, the place where we decode those long, boring reports that companies put out. Today we are looking at Putnam Emerging Markets, ex-China ETF's shareholder report, and you'll see it's a wild ride with one tricky twist that makes it really pop. This report is all about how well Putnam Emerging Markets ex-China ETF did over the past year, from 2024 to 2025. We are going to look at what the costs were, how the fund performed, and what changes happened during the year. A major focus will be its returns and how it stacks up against the market, including a peek at where it invested its money. But before I start, if you appreciate these simplest explanations, make sure to subscribe and check out our Discord community linked below. First, let's look at costs. For every $10,000 invested, the fund charged $89 in expenses last year. This is like paying 0.84% of your investment each year to cover management and other costs. Keep in mind that this number is lower because of fee waivers or reimbursements, meaning that the actual cost could potentially be higher without these reductions. Now for the exciting part, performance. Over the past year, the fund returned almost 12%, specifically 11.76%. That sounds pretty good compared to its benchmark, the MSCI Emerging Markets ex-China Index NR, which only returned 3.31% during the same period, so the fund did a solid job picking stocks that did well. Some of the top stocks that helped performance include Abu Dhabi Islamic Bank, HD Hyundai Heavy Industries, and Mercado Libre. On the downside, overweight positions in Kia, Bank Mandiri, and Supreme Industries didn't do so hot, which held back returns. It is very interesting to check how a $10,000 investment would have grown since the fund started on May 17, 2023. And to April 30, 2025, the fund returned 18.30% annually from inception. By comparison, and I hope you are sitting down, the MSCI Emerging Markets ex-China Index NR returned market to 2%. One thing that is important is fund performance figures may reflect fee waivers or expense reimbursements, without which numbers could be worse. Let's move on to some key fund statistics. The total net assets, or in simpler words, what the fund is worth, is about $7.8 million. Key to always remember, this fund is relatively small. The fund holds 51 different investments. Keep that number in mind since it explains the risk equity of this particular financial instrument. The fund paid $66,498.5 in management fees. This covers all of their services. The portfolio turnover rate is 53%, meaning in simpler words that the fund almost swapped half its investments during the year. Now let's dive into where the fund put its money. Financials like banks account for the largest slice, roughly 28%. Coming in second, we have semiconductors, which are computer components, at 18.1%. Next, we have information technology, basic telephone communication, and hotels, restaurants, and leisure at 8%, 7%, and 4% respectively. What's important to find out is that this covers 55% of net assets, which gives us a great picture for the direction of the fund's investments. Time for a little bit of corporate drama. There were some big changes with the investment advisors. In January 2024, Franklin Templeton bought Putnam, which changed who was in charge of managing the fund. Franklin Advisors became a sub-advisor in July of 2024. Then, late in 2024, PEL was merged into Franklin Templeton Investment Management, which led to that company becoming the new sub-advisor. All of this is really business talk for saying some important hands changed around the fund. Moving on to the financial statements, we see the accounting firm PricewaterhouseCoopers LLP audited the books and gave them a thumbs up as of June 16, 2025, which means that those numbers are legit. Checking their statement of assets and labelites, at the end of April, total assets were about $8 million. Subtracting the liabilities, what they owe as opposed to what they own, of about $18,000, you get the net assets of $7.18,000 and you get the net assets of $7.05 a share. The fund reports $185,000 and investment income. It paid $66,498 in expenses, which results in a net investment income is roughly $119,000. Income is roughly $119,000 for the year. After factoring in realized and unrealized gains from their investments, the fund saw an increase in net assets of $86,305. From the startup period to the end, net investment produced an increase in assets of $865,305, offset by $380,000 in distributions, to end with about $480,000 in new funds and an end total of about $7.8 million. That's the equivalent of 150,000 shares during the periods considered. For per share operating performance, the net asset value at the beginning of the period was about $49. ending at almost $53. Total return was about near 12%. Some basic ratios such as expenses over investments and percentage of income versus assets yielded 0.84 and 1.5 respectively. Keep in mind that numbers may account for waiving and reimbursements, without which the investment may have been different. Portfolio turnover, or the rate which investments are changed, was roughly 53%. Finally, in the last bit of the report, federal tax information, interest and dividend income from foreign countries totaled $199,271, and the fund paid 66,007 INRs in taxes to those countries. Overall, while this fund has a small market capitalization for its ETF and a limited amount of investments, it is able to generate returns that beat out the average for its benchmark. The Mu report's details are positive, and it comes down to a fund that might just be working. The biggest change is hands, with a series of acquisitions to take over the fund. The biggest risk overall comes down to the size and amount of instruments that it holds, which may or may not be enough to be considered reliably diversified, especially in emerging market soft bets. It's it for this report. I hope that was insightful. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.